Yeah, hello all. Welcome to today's monthly expiry analysis of Bank Nifty. So let us get straight into the analysis. So first, going to the macros. So let me just zoom out the dollar index chart. So as we saw, dollar index yesterday post our market closing, it kind of slipped a bit and closed towards its lows. So dollar index closing towards its daily lows was a kind of positive sentiment for the market, and in fact, it opened up with a small gap up because of this sentiment. And then once it opened up today, it started to go up to test its previous swings. And at around 9:30, 9:15, when our market was opening, dollar index was a bit of sideways to it was coming down. So this was the context. So this is what created a positive sentiment in the market with the overall yesterday's context, and as well as at opening, this was the situation. So dollar index was kind of falling, and accompanying this, there was a rising Dow future. So this created a positive bias in the mind at the opening of the market, and accordingly, when we go to the order flow analysis, we see that the first candle is pretty much bullish. So why bullish? Because it's a big green candle, and the delta is also good. So not much delta is being lost here. So if you see, you must always compare how much of delta is lost vis-a-vis the max delta. So somebody was asking about max delta thing. So this is how we compare delta with respect to max delta and see how much delta it has lost and what is the result it is producing. So here we see that there's not much of loss with respect to the max delta, and the candle is creating a it's a bullish candle. So the bias should be positive in such context. So this is a relative to max delta. You must read the delta or vis-a-vis min delta versus delta. So have a positive bias, and then the next are just sideways candles, and then finally market breaks the zone, and it shoots up. So this was a good bullish trade. In fact, if one has to take in the morning, given the global context. But here comes the simple repetition of concepts which we discuss on daily basis. That appearance of limit selling condition, where the at the top we get a rejection candle and the delta is lost. We can see here out of 21k max delta, 3k. So hardly how much. So I mean 20, so almost 18k worth of delta is lost. So 18k delta is lost in the sense that some limit seller has absorbed these orders, right? So at this must just mark the zone, and it this is a standard shorting trade, especially when the delta is also lost. And this is also confirmed by the next candle where we have aggressive seller. So the price keeps on making a low. So this is and finally it approaches the VWAP and tries to bounce. So since the price, when it approaches VWAP, it has lost a bit of negative delta from the min delta of 25k to 8k. It creates a kind of reversal kind of bias, and accordingly, next candle is green. So this is how we can also predict the next candle based on the earlier candles delta difference from delta to min delta. But can we say there's a strength here? No, because it's not able to significantly go up, and also it is ending up with an upper wick, and the delta is also getting consumed. So one can conclude that still the buyers are not as strong in this scenario, and also this is confirmed by the next candle where also we can see that this loss of delta compared to max delta, we're losing delta, and the candle is closing green. So selling is still active, is what one can infer, and the price keeps making lows. So always observe the price vis-a-vis the earlier candles closing. So final, it went below the VWAP. Now here we have a simple, uh, uh, a good concept here, that just observe these two candles. These two candles have a similar delta profile. So it is 26, around 26k, and then here it's also 29k. So this is how we conclude that both have a similar delta profile, but the result is different. First is a bearish thing, second is a bullish thing. So here what has happened, all the similar delta profile is creating different result. The cause is delta, but the result is different. So something has changed. What has changed? The scenario has changed from a bearish to bullish. So this candle is green and the delta is red, shows that there is an entry of certain limit buying conditions appearing. And as you can see, this is makes more sense because this was the zone where the market took off in the morning. So it is appearing at the same zone. So this appearing at the same zone is a very strong confirmation to go long at that area. So accordingly, the market reversed, and ultimately it went back to its previous limit selling zone. So now here we discuss one more concept of order flow confluence. So where uh, we know that this is a limit selling zone, right? So when the market approach and how the market approaches towards this zone, like for example, in this candle we see that there is a delta getting lost. So what does this mean? This means that the sellers are, get since this is a resistance zone of earlier resistance zone, so the delta is getting lost. We are seeing appearance of upper wicks. So these are confirmations that one may think of going for a short trade at this point. Upper wicks, loss of the delta. And one more concept of order flow confluence, what I mean is we must see a similar instrument, which is Nifty in this case, and see what Nifty is doing at that point. So when for this case, let us go for Nifty at around 2 o'clock. At around 2 o'clock, if we see Nifty, so one can easily observe that the bias which you had framed. So even Nifty is appearing at the same similar selling zone. At 2 o'clock, if you see Nifty is also losing delta from hardly 23k out of 40k. So almost half it is losing, and the min delta kind of increasing, if you see. And overall there's loss of delta as Nifty is also approaching. So there is an order flow confluence here. It means that two similar instruments are behaving in the same fashion. So this is a strong setup to go short. In fact, this is where I went short um, for this down move. But this down move, why I was very apprehensive in this down move is because although the trade is on till VWAP, but the context slightly changed at this point, because the macros when I was observing here, we saw a sharp fall. There was a waterfall kind of scenario in dollar index. So this was at around 230. In fact, from 215 itself, dollar index started to go down. So dollar index, was going down, and the Dow future was going up. So this was, clear case of positive sentiment in the macro. So if anyone is short against this condition, it definitely has to be for a very short time. So this is what made me apprehensive, and I booked the short put trade. But although Bank Nifty gave a good move, but this had to be short. And one more confirmation of this point is the appearance of lower wicks again, right? So while it is falling, it is creating lower wick. So this is also a strong confirmation that the fall, and this lower wick is appearing in the same zone. So all this makes us to conclude that the final move will definitely be on the upside because of the global falling dollar index context. And the final confirmation came from this. The candle is red, and there is a strong entry of aggressive buyers. So this is aggressive buyers here. The delta is green. The candle is not able to go below this zone again. Aggressive buyers are entering, and this is not limit buyers, these are aggressive buyers, and the market is taken up. It also supports the global context as well as the expiry context of closing of positions at the end. So ultimately the Bank Nifty reached its earlier highs. So this is how, with respect to order flow confluence, comparing two similar instruments as well as the global macros, overall range bound to positive bias kind of scenario had built up for this expiry. I hope this analysis was helpful. Thank you.